It's an open house. Why not? All right. So we'll just see if it gets there. Looks like that. All right. It's an open house. Why not? All right. All right, we're up. Good job. No, we'll just see if it. Let's take a look and see. We already had unemployment claims this morning. As you can see, it resulted in a very positive move to the upside. It's an open house. Why not? And be careful. This might be a cup and handle, which means we'll have one short move. Let's take a look and see. We already had unemployment claims this morning. As you can see, it resulted in a very positive move to the upside. Open house. Let's take a look. And we're going with dollar positive, obviously. Handle, which means we'll have one short move. Let's take a look and see. We already had unemployment claims this morning. As you can see, it resulted in a very positive move to the upside. Let's take a look. And we're going with dollar positive, obviously. Handle, which means we'll have one short move. Let's take a look and see. We already had. Let me try it again. Yeah. Very strange. Well, it took it away from me, so it must be some problem. Anyway. All right, so we do have a close in reverse, as you can see, and we just barely cracked the zero line of the MACD. Just barely did it. So that it's not very convincing. You know, that's when it's convincing. This is not very convincing, right? We put a note up here that that's unemployment. Okay, so I'll remember it later. All right. Well, let's go take a look and see what the charts say. All right, dollar going up, it's going down, but you see the close in reverse immediately. This may only be a pullback, all right? So let's go see if we even have any room left. So I'll pull up the ATR, euro dollar ATR is right there. 67 pips is the low ATR. It's a dog. Find the 5 o'clock candle from yesterday, 1600. Right there, we put in a high afterwards. So you take the high after the New York fix, you go down 67 pips, and that's the target. And we only got a few pips left. Nothing left there, right? Same thing over here on the British pound dollar. We don't have 55 pips left. That is the target at 122.50, and British pound dollar has an 87 pip ATR. 2 pips off of a fib sequence number. They're technically trading it, folks. Dollar Swissy. It had a little push up here, not much, as you can see. All right, and let's see what's going on here. Man, let's see if we even have any room. 67 pip ATR. Find the 5 o'clock candle from yesterday. We put a low in after that. That's this one. We're going up for 67 pips. And as you can see, we don't have 55 pips. All right. You got to be way down here again. All right. Once you come down here, you're going to have to prove that you can get up there, which means you got to take this top off, and we only have 32 pips left. Right. So nothing there. All right. And you know, this is a problem for a lot of retail traders, is they don't realize that the ATR, how important the ATR is, and because they don't know it, they're at the end of the ATR and they finally get their signal, and because they don't know that they're about to slam into the number one's barrier for the day, and they take it and they get stopped out as the market reacts. All right, so we've all done it, you know. No, everybody here's got the T-shirt, but we don't have to do it anymore. All right. Is there a reason we don't trade the Swiss yen? Yeah, we got plenty to trade. It's not a bad currency, but we don't do it. You know, we could look at it, you know. So not you know, it moves pretty well. I haven't looked at it in years, but it always did move pretty well. You know, they're just, you know, there's so many currencies after a while, you know, well, how many do you need? Anyway, all right, to the pip, to its ATR, it was an alert last night. Dollar yen, 117 pip ATR, did all 117 pips right there. Sweet, sweet, sweet. I was in that trade, so I did pretty well. I did exit my live trade yesterday for break even. Remember, I kept saying I just don't like this. It's not doing it. I'm going to get it out for break even. So I took it out for break even, and I'm very glad I did that. And then when it reversed, I took it up with the alert last night, and there it is. Nice. Already done though. Aussie dollar. All right. Once again, small ATR. Let's see if we even have any room. 45 Aussie dollar, 53 pip ATR. Nothing. All right. Find the 5 o'clock candle, 1600. High end after that. We go up there. We don't have 55 pips from the top. So, you know, you don't have 53. All right. See, right to the pip. Gee, I wonder if they knew where it was. They knew exactly where it was. Euro yen. All right. Euro yen. We're just shy of the ATR target now. Yeah, exactly. That's what I did with it last night, Andrew. I had FX Synergy manage it. Yeah. Good to see you, Andrew. Hope your back is better. Yeah. That whatever you were taking, quadral something work. I don't know. Anyway, we only got about 10 pips left, as you can see, and they just missed it here, 71 to 7 by 8 pips. That's all they missed it by. All right, that was the alert last night also. We'll see if traders got it. All right, over to pound yen. It was not alert, but it was, remember we talked yesterday about it being a potential cup and handle. Well, it ended up being one. As you see, there it is. Cup and handle. All right, so we were right. Nice job, Larry. All right, as usual, Larry catches them. He sees them all the time. All right, nothing to do. We've already done. Still in pain, but the condos are heaven. Okay, great. That's awesome to know, Andrew. Good. All right, pound yen. Let's see how much where the target is. Pretty sure it's already happened. 122 pip ATR. Find the 5 o'clock candle. 1600 right there. We put a low in afterwards. We're going up for 122 pips, and we're a buyer. And right to it. See that? There you go. All right. New Zealand. Yeah, we're not used to having Andrew in class, are we? Fast trackers. Kind of nice, isn't it? So New Zealand yen's got a really low. Yeah, FX Synergy is a robot that manages. It's the best trade manager for MT4 there ever was. I've been using it 10 years. Right? So you pre-program it to add positions, move your stop, do all that, and then you go to bed, walk away. That's what I did. I went to sleep, woke up this morning with my profit. I don't have to move my stops. I don't have to add any. I scale in automatically. It does what I programmed it to do. So there you go. Let's see if we got any thing left here. 54 pips. If it'll do 54, it'll do 55. Find the 5 o'clock candle. We got a high after that, going down for 54 pips, and just a couple pips left there. There you go. So there's not much over there, as you can see. Already happened. Do the announcement. Yeah, now it is holding right here, and you can see MACD is telling you we're trying to go down. All right, so it's structured to go down. Why isn't it going down? Well, you watch the GJ, the EJ, and the dollar yen going up. They decided we're not going to go up. We're going to wait for the dollar to come back down. All right, so that tells you that they are anticipating a big trade to the downside. All right, a big trade to the downside. So let's go up here to the 60 and take a look at it. And we might want to adjust this. Yeah, we will. I'll take this last piece now. All right. So all I care about now is the last piece here. And, you know, will it go? I don't know. Here we go. So down in here is where we're interested in. And let's see what the Three Musketeers say. All right. So now our hypothesis is it's hanging here. It did not go up when all the other yens went up. It did not go up because they structured down and they're waiting for down. So let's see what the Three Musketeers say. They say you're going up, and you can see that you're in a triangle. See the triangle? It's telling you you're in a triangle, right? See right there. All right. So we're in a symmetrical triangle. All right. We have an A, B, C correction, all right? However you got into the triangle is how you're coming out, and whatever the length of that is what the target is. Wow, all right? And there's an announcement tonight. Exactly right, Lars. So let's go see this. I doubt it'll happen this morning. I think Lars is right. They're waiting for that announcement, but they'll probably position themselves right here, and most likely will telegraph the intention by putting an open and close candle below this line. 64 pip ATR. Find the 5 o'clock candle from yesterday, 1600. We put in a high after that. We go take the high. We go down 64 pips. 64 pips, and there we go. And unfortunately, when we do break out, we won't get an ATR. We won't have enough room for the ATR. But the announcement tonight is when the ATR changes, and you'll get 64 more pips to the downside. So really watch this one tonight, folks. All right, watch that tonight. That might be a sweet little opportunity. All right. Euro Aussie. All right, we're underway to target right now. It was a alert also, and it went. All right, so we don't have 55 pips left. All right, yeah, just 30 pips left to target. That's it. Over to pound Aussie, and it's just starting here. Do we have 55 pips? Let's go see. Go to the target. We got a range top before it, so that's kind of a problem. We'll have at 55 pips if you get a pullback. So if they pull up here and pull back, you'll have 55 pips. Let me get a fib on here. Swing low, swing high, swing low, right there, and the 1000 is right there. Okay, so now we can see the opportunity. Let's go look at the Three Musketeers, and what do they say? All right, by the way, we call these three charts the Three Musketeers. They give us two pieces of information that we can't get any other way. They tell us what the order flow is today and who's in control of the currency. We call them the Three Musketeers because the Three Musketeers had a saying, all for one and one for all. So when all three of these charts say the same thing, that's what it's doing. It's going up on the 240. It's going up on the 60. It's going up on the 10, and the order flow is to the upside. We then validate these three with the three oscillators. Yeah, we're going up. Yeah, we're going up. Yeah, we're going up. MACD says, yeah, we're going up. Anybody want to buy this thing? Not me. All right, we got a breakout, so it gives us permission to go down to the 10-minute chart. We go down to the 10. Remember, we got to have 55 pips. So you can't take it here. You'd be buying at the top. You need to hook back down to 55 pips. Now, you can see the trade right here. Pretty simple right there. And trade one is right here after the break hook and go. Trade two is here. That's a snowman. All right. So we want the snowman. Why do we want it? Because trade one is in the head. Trade two is in the body. 1/3 of our lots here with 3 times the stop. As soon as the trade two goes in, which is 2/3 of our lots, the stop has to be moved to break even. Now you can't lose on trade one, and every pip it goes to target, it's adding pips here and adding pips here. And when you get to target, it's a 1-to-1 risk to reward ratio. It's very simple. All right. There we go. Thanks, Ed. All right. There we go. All right. Over to Euro New Zealand, and Euro New Zealand is trying to make a push to the upside right now. It's trying to push out. Let's go up to a 60. Take a look, and you can see. There we go. All right, so we can get rid of this from yesterday. All right. So the question is, if we push out, do we have any room? All right, so I'm going to remove all the downside stuff from yesterday. I don't touch my charts, by the way, unless I trade. I'm not touching my charts until I come back in here. All right, so that you can watch the process. Euro New Zealand, 124 pip ATR. Find the 5 o'clock candle from yesterday. That's 1600 for me. New York fix, 1600 right there. All right, we put a low in after that. That's this low. We take the low and we go up 124 pips, 1, 2, 4. And there we go. And there's the target. Do we have 55 pips left when we break out? We go to the target. We go down 55 pips, and we will have 55 pips. Right? They're all everything on here is proprietary CryptoCat, and we don't. They're all locked up on our lawyer's safe. Right? Because if we didn't do that, well, we started this 20 years ago, over 20 years ago, so 21 years ago, and there would be nothing. We wouldn't have anything at all today if we did that. So it's all hidden. All right. We never wanted to be in the business. It was just hidden for us. All right. And then we started a club. Okay, we got a club because we had a lot of traders who wanted to trade with us. Started a club and everybody paid dues. And the next thing you know, we had 100 traders on there. And the next thing we knew, we either had it was problems with tech support and redundant servers and all that stuff. And we either had to get out of the business or get in. So we made the decision because we had over 100 traders who were they didn't want us to quit it. And so we made a decision to get in the business. All right. We never intended to be in the charting business. Let me tell you, never. All right. We have 55 pips, but we got to come all the way back to right where it is right now. Yeah, that's right. Be a sponge is exactly right. All right, here we go. Find the 5 o'clock. We found it already. All right, I need a fib on here. Why do I need a fib? Because I got to move my stop in this wide open space. Where do I move my stop? I have no place to do that. I only move my stop if I have a mathematical reason to do so. So I got to find the mathematical reason. Swing low, swing high, swing low. Right there. And now I see the trade and I also see where to move my stops. See, very simple. All right. So trade 1 is here on a break hook and go. Trade 2 is here. And now it makes a snowman and we're good to go. Euro New Zealand's on the table for a buy. And there we go. Over to pound New Zealand. All right. So there's the breakout. All right. To the upside. All right. Now, what this is telling you is that right now, they think the dollar is going to come down because the last 4 months or so, they've been going opposite of their normal correlation. All right, so this breakout tells you they think the dollar's done. All right, let's get rid of this. All right, now we're back in the range. Got a very simple range here. Put slope support across this last piece right here. And you can see right through there, we're in a breakout. Break, hook, and go up. So there's the opportunity to the upside. MACD is already pushing up. You got a T3 break and a MACD break simultaneously. Now, when this happens, when you get a T3 break and a MACD break simultaneously, like this, all right, it's 82% going to go in the direction of the a breakout, all right, of the break, all right? So we have a MACD break to the upside. 82% of the time it's going to work, all right? Now, if you're on MT4, you're on TradingView, it's 66%. It's not bad. Don't get me wrong. That's not bad. So it does 66% over there. But there we go. With our settings, it's 82. So, it's tweaked a little bit. All right, let's find the target. All right, pull up the ATI. There we go. By the way, you can trade cryptos on our charts. You can trade anything on our charts that we have an exchange for. All right. Oh, back to that. If we have the feed for it, you can trade it. And we got lots of feeds. All right. We got 50 cryptos probably. We'll look at Bitcoin in a minute since we got some crypto traders in here. There we go. Pound New Zealand, 133 pip ATR. Find the 5 o'clock candle from yesterday right here. 5 o'clock, 1600 right there. And we're going to put a low end down there. We put that up there. Where did that? Hold on. Let me make sure that stays up. All right. 133 pips buy, 133, 133. We're a buyer. And there we go. So we got plenty of room up here, as you can see. I got to get a fib on here so I know where to move my stops. Swing high, low, swing high, back to swing low, which is right there. And now I see the trade. All right. You see, they know where that 1,000 is right there. See? All right. So it has to hook back down. I can't buy at the top. Don't ever buy at the top. All right. If you got to create a song or something that reminds you, there's it. When it pulls back, that's trade 1. That's trade 2. What's the problem? I got to have a pullback. Could I put my 2 entry orders in here for buy stops for up there? No, I can't. Why? Because it could wick me in right here. And unless I get a pullback, as soon as I get a pullback, I put 2 lots in for the upside and wait for the bounce. All right. So there you go. Pound New Zealand. Excuse me. Up. Not a bad opportunity either. Looks pretty nice. All right. Over to New Zealand yen. All right, New Zealand yen, and we had a pretty strong move. Let's say it was alert from not alert, but a session recap yesterday. New Zealand yen has a 58 pip ATR. Very hard to trade it. We probably don't get it, but we'll see. Let me go to, 1600. Where are you? 1600 right there. Put a low in after that. We're going up for 58 pips. And so you can see there's nothing there. It's gone to the pip, basically, right there. Missed it by 2 pips right there. That's all I missed the target by. This is why you use the ATR, folks. All right. If you're not using the ATR, there we go. It's just you don't have the information. You just don't have the information. Right? All right, pound Swissy making a bounce to the upside right now. Is this a pullback, or is this a move to the upside, or is it an A, B, and then a C wave to the downside? All right, right now the histograms are making the turn, so it's showing you right there to the upside that we are rolling over to continue this move up. All right, let's go see what the Three Musketeers say about it. And Three Musketeers say, we were going up, we stalled out. No, the order flow's up. Yeah, we're going up. No, it's still going down. No, we're about to turn it up again, and we've already turned it, as you can see. And yep, they sure have. So they're going up. All right. So you always go with what the chart says. You don't go with what your bias says. That gets you in trouble. Let's put the channel on now, since we know that we're going up right there and right there. Heart line proved, heart line proved, heart line proved, heart line proved. All right, it's got to prove the heart line. If you can't prove the heart line, you don't know that outer line. All right. Now, if you're on MT4, you don't have a heart line. So you got to use Andrew's pitchfork, which is a pain. All right, pound Swissy ATR is 58 pips also. Find the 5 o'clock candle from yesterday. 1600, where are you? Right, well, way up there. 1600, right up there. All right, and we're going. We put a low in just now, a couple of candles ago. We're a buyer for 58 pips, and we don't have 55 pips left because that's all we got left. All right, so what did we find? We found nothing on the majors because they already moved on the unemployment and news. Over to the Euro Aussie, God, unless we get a pullback, we got nothing, and it just keeps on moving. All right, but it's got to pull back. See, if it comes down to this T30, each one of these lines is a T30. All right, so you say, well, who cares about T30s? Who cares about what they are? Well, we do, and I'll show you why. That's because it's part of the Fibonacci sequence. 34. Why do we care about 55? Because that's what bankers need to make a trade. Why are most currencies doing 89 pips a day? Because that's the fib sequence. What about the big ones like pound New Zealand? About 144 pips a day. All right. So that's 34 is very important, and we mark it. We start with right here it says grid base. That's the pivot point. We get it every day. Now, if you don't have it, you're going to have to do the work. It takes about an hour a day, and you have to change them every day because they change every day at 5 o'clock also. So there you go. We got nothing left unless it pulls back. Nothing left. All right. So we'll take that off and right there because it's really steaming up there. We got Euro New Zealand up. All right. If we can break out of here. All right. If we can break, it hasn't happened yet. And we got pound New Zealand. It has broken. All right. So pound New Zealand is the most likely candidate this morning. And you remember, we're watching 20 currencies. All right. Now, 3 of them we can't trade right now because the ATRs are too low. So it's down to 17 currencies. But out of 7 currencies, we got 1, maybe 2 opportunities. 1 right here, and maybe 2 on that Euro New Zealand. Maybe. All right. You got to pull down. All right. We can't take it at the top. So we go down to the 10-minute chart, and it is doing that. All right. Now, they know that. That's why they're doing it. They manipulate it to do that. All right. That's why when you do your break, hook, and go work, which is 300 of them minimum, all done at one time. When you do your break, hook, and goes on a 10-minute chart, not on a 5. A 5 is too fast, too many false positives. Not on a 15. A 15 is too late. The 10-minute is the default chart for a retail trader. All right. And 98% of retail traders are trading off of 5 and wondering why they can't win because it gives false positives. That's why. It's like a COVID test. So there. All right. So the bankers know they got to do a break, hook, and go. So they do that how often? Over 90% of the time. So only 1 time out of 10 they don't. 1 time out of 10, they don't do it. So what you do, wait for it. Why? Because it gives me the new low for 1, which means I buy at the low. All right, I'm not buying at the top, I'm buying at the low. All right, it's giving me the point where the other traders will come in. All right, so there you go. Uh, let's see if we have 55 pips left. I'm going to make sure. I'm pretty sure we do, but where are we going to be at? Yeah, we got 55. So we're below that already. We got 60 pips now. All right. Well, first you got to find it, Sabitri. All right. You got to go get a pivot point. All right. So you go out here. Let me find it for you. Yeah. All right. Here are the pivot points. Oh, all right. These are the pivot points right here. See, pivot point. Every currency's got one right there. So you got to go to Aussie CAD. You get that number. You go in there and draw a line on your charts. It's just a manual line. All right. Then you go to the Aussie yen and you get that number. And you go draw a line. And then from that line, you got to go up and down 30 pips. Every 30 pips. It's a 34 pip. It's 34 pip correlation. All right. In the fib sequence, less the spread in and less the spread out. That's how it's done. All right. It's going to take you about an hour a day to do that. All right. If you have to do the ATRs manually, it's going to take you about an hour a day to do that. So 2 hours a day is getting two pieces of information that are included in our charts. That's crazy. So, put a value to the 2 hours a day. That's 10 hours a week. Wow. 10 hours a week of time. And time is money. All right, we're at the previous support. So we anticipate the buy here. All right. So watch for the buy. Now we have 4 more minutes till the next candle closes. All right. Until this candle closes and we get a new one. So when you're that close, wait for the new candle, which is only 4 minutes away. Now it's only 3.5. All right. Wait for it and see how it opens. If it opens bright green headed up, that's your entry. If it opens and it's not green at all, then you sit on the sidelines. If it opens red, you absolutely don't. All right. Do anything. All right. So you see they're hovering right there at that support because this is what they do, folks. All right. Go do 300 break hook and goes and you'll see it. All right. How do I learn the Forex? You don't learn it because Scott tells you something. You learn it because you go do the work to prove that what I say is true. All right. I got no reason to lie for you, and I've already done the work. And so have my traders, So we got hundreds of fast track traders around the world. Right. And they've done the work. That's why they make the money. They make a lot of pips, hundreds a day, sometimes thousands. All right, we got 3 more minutes now. Let's watch. See, they're waiting for that themselves. See, they don't want to push it through because that's going to send the wrong information. All right, but they don't want to bounce here either until they get the next candle, so they'd be able to show what the agenda is. See, the agenda is always being told to you in the charts. You have to learn the language of the charts, okay? How long does it take to learn a language? About 750 hours. If you want to learn English to maybe Swedish or Romanian or Spanish or vice versa, So 750 hours, all right? So what happens is that traders don't do the work to learn the language. They don't learn the work. They just make pretty charts. And I can't understand why they don't trade. I can't trade. I can make pretty charts, but I can't trade. What's wrong? It's because you haven't done the work, and you have to do the work. It's just that simple. You have to do it. If you don't do it, you're still a gambler. All right. Don't want to be a gambler. You want to be a trader. All right. All right. We got 2 minutes until that candle opens. We're going to wait. Now, you see, they're right on that support right now. They could bounce because there'll be entry orders there. All right. So be careful. They may go right here. All right. I hope they wait 2 minutes, but you never know. Right here, previous support, previous resistance right here is now support over here. Resistance is the past, is support in the future. Support in the past is resistance in the future. All right. They're right on that number. And you see, they do not want to break that number. They do not want to. Because that's going to send the wrong piece of information, right? So, I'm speaking English in here. Most of you speak English as your first language. So, you're not really paying much attention to what I'm saying at all, right? Pero si cambio en español está muy difícil para ti. But if I switch to Spanish, it might be a little difficult for you because you're not fluent in Spanish, right? See? So we got to learn the language of the charts. How do I learn the language of the charts? 300 of everything, 300 pullbacks, 300 break, hook, and goes. It's on our website, Mike, but it'll be in the academy. Right? So we do have a deal with them because we're big supporters for one. Yeah, there you go. Muy difícil para ti, Trader Joe. All right, see, they found some buyers there. We're going to wait. We're going to wait till that new candle forms. What is it going to be? Is it going to be bright green? There it is right there. Okay, now watch for them to take it to the support and then bounce. That's your opportunity right there. It's enter when ready. All right, that's what it means. I'm not calling a trade here. I'm showing you the parameters of the trade. The trade is what it is. All right, what does the chart say we're doing? And the chart says, all right, the chart says we're trying to go up. 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 All right, there you go. All right. Once we get in the trade, start working our way up here, we'll use the confirmer down here to stay in the trade. We don't use that until that happens. All right. So that's another chart there you haven't seen yet. Yep. The plain vanilla options just expired. Thank you, Andrew. All right. So you see, they're still pushing down. They're not finding enough buyers. See, they're not finding buyers. All right. What's wrong? If they're not finding buyers, what's wrong? That's what says for you. Wait, don't be in a hurry. Don't be in a hurry here. You got well, I may miss 2 pips. It's worth 2 pips for safety. All right. Make sure you see them bouncing. And right now I don't see them bouncing. I see them still pushing to the downside. All right. While we're waiting, let's check that Euro New Zealand. We only got 2 currencies to trade this morning. So, that's it. Only 2. Well, but the place I normally trade, they're trading everything. Yeah, how's that working out for you? The candle is green, man. There you go, Trader Joe. All right, we got a breakout. All right, we can go to the 10. There we go. Break. We already got a hook. There's the hook. All right, now with the hook in play, you can place trade 2. Right there above 76.91, I'd trade it, put it at 76.92, maybe 4, just to be a little further. 76.94 with the target at 77.32. Remember, that's 2 lots. All right, this will be 130 lots, 1 lot. This will be 2. Whatever amount you can trade, you got to divide it by 3. All right. And then sometimes you got to trade micros because you can't trade minis, right? How do I look at that? You look at that on the IC. The IC has it already built in. Go down here, risk calculator. Put your account in there. Put 2% with a 33 pip stop, and you say, okay, I want to trade this Euro New Zealand. How many lots can I trade with that money? Euro New Zealand. I put it there. All right, and if I want to try, I can trade 19 and a half micros, right? If I have 2,000 in my account, right? How about minis? All right, I can only trade 1.96. So I can't get 2 positions in with minis. See, I need 1 position on the first one, and then I need 2 on the second one. Well, I can only put 1 in, not even 1. So I got to trade micros on this one. I go to micro, now I get 19. All right. So my first trade would be 6 lots. All right, 6 micros, and the second would be the whatever's left of the 19. That's how you figure it out. Oh gosh, I'm not doing that. All right, you want to know how much it pays? There it is. Euro New Zealand. It pays $6 a pip. Is all. $6 a pip if you're trading a standard account. All right, but that's why you can trade 19 of them instead of 4. Right. So. All right. So if I wanted to trade, however, if I want to trade pound dollar, all right, I could trade 19 over here. If I want to trade pound dollar, right there, pound dollar, what can I trade? Only 12. See? So it'd be 4, 4, and 4 right there. 4 mini lots in, 8 mini lots coming in on trade 2. Right? See, every currency is different, folks. It's not the same. Right? Do retail traders think of that? Nope, they don't. They don't do it. Let's look at Bitcoin. What's Bitcoin doing? A little bit of push out there. You didn't know that was Bitcoin? Look, you get an arrow, painted candle right there. There it is, going up. All right, pop a fib. Where are we going? Swing low, swing high, swing low. There we go. We're right at the 1270. All right, the 618 right there. If you get in this area, it's going to run. All right. See, when you get a wide open space, what do? They run it. They get a wide open space, they run it. See that? That's right. Yeah, that's right, Robert. So they run that thing. Everybody does. He said, doesn't matter what it is. You want to trade pork bellies? You trade them off our charts if we have a feed. Why? Because trading is trading. It doesn't matter what the commodity is. British pound or soybeans, doesn't matter. Right? It's human nature. Trading is a visual representation of the herd that's trading it. That's what it is. And the herd works together. They don't know they work together. They think they're not, but they are. Right? So, and especially in Bitcoin, you have no banks manipulating it. So now all you got is perception. What people think Bitcoin is going to go up to or down to. That's it. Perception. Same with stocks. It's all perception. It's not that way in the Forex. In the Forex, it's about what does the math tell you? What are the technicals? All right. And the banks are running an agenda. Why? Because of their option contracts. They have millions and billions of dollars in option contracts. They use the spot market to drive to their option contracts. Well, do I need to know about options? A little bit, but you don't need to know where they're always on an even number, or almost always on an even number, right? 0, 0, and a 50 number. And so just figure every one of them, that's it. All right. All right, back over to pound New Zealand. All right. Well, now look at, see, we waited. Why did we wait? They weren't giving us the information and they're still pushing down. Why are they pushing down? They're not finding buyers. You see that? Yeah, me neither. Yeah, Daniel was a trader on the Fidelity floor. Daniel was. And, trades Forex now. Yeah, exactly right. That's because they do it. The math doesn't mean anything unless they do it. But if they do it, that's what's important. Yeah, they're doing the math. So I got to get a handle on the math. I'm not a math guy. I'm not a math guy. My wife won't let me touch the checkbook. She sees me near that checkbook, she'll go, "You stay away from that thing." And the third day of our marriage, on our honeymoon, she saw me looking at the checkbook. She said, "Don't you even think about touching that thing." And so I said, okay, and I never have, and I've been married 45 years. So there you go. All right, now we're starting to see what we need to see. All right, there's no more push to the downside. You see that? All right. No more push to the downside. We're watching for a bounce. Now, we only have 3 minutes for this next candle to form. Should we wait for the next candle? Yeah. Or is there a hurry in the Forex? This is now taking we're on our third 10-minute candle. That's the 30 minutes, folks. And we're not in yet. All right. Well, I would have been in because it was green. We don't trade because it's green. Green just gives us information. We got a lot of participants here. They can go if they want to. All right. Well, yeah, but you got a big candle down here. It isn't green. That's because this is an uncontested area. This is uncontested. This is a contested area right here. All you got to do is go in the past and look, when they're coming down. All right. Wide open space, contested area, wide open space, contested area, wide open space, contested area, wide open space, contested area. See? What are they doing? That's what they're doing. So where do you want to trade? In a wide open, uncontested space. That's what you want to do. It was real easy to see on the dollar yen. All you got to do is look at this. All right. Where's the first contested space? Right there. Where did they stall? Right there. Then they went ahead and went to target. Gee, look at that. Isn't that amazing? Wow. All right. Your job is to find those wide open spaces. Yeah, that's what I'm going to do right now. Look at this space right here. This is why they have pole flags form. All right. So right here, you had a flag, right? This area inside here is uncontested, but this top right here is. You see that? And they tried really hard there to break it and they were not successful. They tried again and they were not successful. Okay, well, that means we don't have any buyers. Let's go down and find some buyers. So they break to the downside. Here's a close and reverse to the upside. And from that point on, they never went up. Never went down. See that? What do they do? That's the language of the charts, folks. That's the language, and you got to learn it. You have to learn it. All right? And that takes time. And I don't care if you've been trading 3 years, right? You think you got a long time in, but if you've never done the work, you're basically a beginning trader. But I've been trading 3 years. Yeah, but you're a beginning trader because you don't know why. The important thing is to understand the why of the market, not the how of the market. Anybody can learn how to put a fib on, how to do any of that, right? All right, so we have a break and a hook, but we're back inside here. So now we have to get another break hook and go out of here, all right? So that stalls that one out right there. All right, let's go look at the pound Aussie. No, it's already there. All right, pound Aussie, if it gets back down here, then it gets 55 pips. And it's coming down, so we may get that pound Aussie. You never know. All right. You're New Zealand. All right, wrong information right now. Can't touch it. All right, now here we go. All right, now they had to break it through. All right, and do you see what they found? Closing reverses right now. They found money on this resistance, not this one. Does everybody see it? All right, so which one is it going to be? The one they use. They used it there. All right, we were watching for this one. All right, they did use it there, but they didn't find any buyers there. See, they didn't find any buyers. So they went down to the next resistance, and what did they find? Buyers. Close and reverse. How do I trade a close and reverse? Close and reverse. Fast trackers are already in it, but close and reverse is this. You'll have a down candle, in this case right here, and then you'll have an up candle on the close and reverse, all right? So they closed and reversed right here. That's why these right here where those bottoms are, that's because they closed the sell, which is to go find buyers, and found buyers and became buyers themselves, all right? Now, where do I trade it? If you can break the top of the down candle right here by 1 pip, you're in. All right, so 1 pip above that candle right there, the body of the candle right there is where you're in. Could I place an entry order right now? Yes, you can. All right, that's at 2.0709. I would put it at 10. Never use an odd number for your entry. Always use an even number on a 3 or a 7 for your stop. All right, so that's what you do. And then trade 2 is up here, right? Right here is a trade 2 to there, right? Oh, not too shabby. All right. So there's a snowman upside down. It'll look like this right there. Trade 1 in the head, trade 2 in the body. All right. All right. Close and reverse. Wow, I've never traded close and reverse. Well, then you need to do 300 minimum. And most of our traders will tell you that's not enough. You got to do probably 1,000. 900 to 1,000 probably will get it into your brain. Because there's so many variations of them. And it's a lot of work because you got to, you're not looking at the ones that are pullbacks, although they're closing reverses. Looking at those, you're looking at the ones that continue to move. All right. Yeah, they're still not finding buyers, folks. If they're having trouble finding buyers, do I want to be a buyer yet? No, I don't. It's anyone ready? Well, it's when you're ready. If you're ready, you do it. If you're not, just sit on your hands. I'm sitting on my hands. For now, we'll see. All right. Let's see if Craig is here this morning. Yeah, Craig, you want to do pip captures while we're waiting? Remember, if they don't find any buyers here, they're going to have to go to the next one, which is this fib right down here. Okay, yeah, Craig's ready. And remember, what is the dollar doing? All right, the dollar is coming down, and it's coming down pretty hard, as you can see. Will it continue up to then do a triple top? Maybe. Is that the top and they're down? Maybe. You have divergence. No matter what, this is the last move, as you can see. It's the last move no matter what. Well, you say, how do I know that? Because you have convergence to the downside. See? This is a good place to turn it right there. You're making a lower high. All right. So there we go. Watch it. Be cautious. Be cautious. All right. EA is being stubborn to get to target. Yep. Let's go do pip captures real quick here for Craig. I don't have too many of them. Go back to here and the alerts. All right. So first thing I do is I come in here and I tell you what I think the dollar index is doing. All right. So I have the dollar. I said it was over here. I said I have it down, but if it reverses, replot the targets in reverse. So what did it do? It reversed. So you replot the targets. All right. But in the meantime, while it was down, a lot of stuff moved because they were, I guess, leery of it. I don't know. We'll see. So the first one I sent out was the EJ. All right. And let me pull it up here. EJ was it was a buy at 159.72, 159.72, right above the T30 there, and the target was 160.80, 160.80, and it went to 160.73. All but 7 pips it got. All right. Anybody in euro yen to the upside? Euro yen to the upside. Scott, 54 and 36. Remember, the 36 on Scott is 2 lots. All right. So that equals 72 lots, pips plus 54, over 100 pips for Scott. Robin, 55 and 89. Gee, Robin, I wonder if you used the fib sequence number. I don't know. It looks like it. Savitri, 40. Okay. Now, Savitri, okay, you've been here a little bit. See, if you had placed the entry orders first, unless you entered late, if you'd placed them first, you'd have had a second position that would have gone in without you even thinking about it. Right? See, by the way, I'm not picking on her. I'm just making a point. So this is a learning time. Right? And that's why you put the entry or the entry order in first. Right? What do we got, Craig? 61 pips. All right. See, now you see traders got hundreds of pips there up on the top. Saeed, 57 and 13. That'll change it. All right. Traders got hundreds of pips, but we're only going to count 61 because we only count the one largest trade. We don't count the add-ons. 58. Okay. 58. All right. Next one I sent out was the Euro Aussie. All right. Euro Aussie. And where are you? Right here. All right. And Euro Aussie was a buy at 65.36, 65.36, right there. Right. Target is 66.22, right up there, and we're 2/3 of the way. That's your second position. Remember, you never make one position. If you make one position, you're a retail trader. You make 2, you're a pro. All right. So the first one is a market order. And the second one is an entry order. The entry order is always 2/3 of your lots. You got to find the place to plan that, and you got to place it. So it's got to be above a barrier that they got to be sure they break. And then there's got to be enough room to the target left. Right. And it's every trade. It's not every once in a while. It's every single trade. Every one. The secret to being successful in the Forex is pressing your winners without exception. Unless you press your winners without exception, you will not succeed. All right. Why is it that 90% of retail traders fail? Because 90% of retail traders are trading for 5, 8, 10 pips. That's why. All right. Nobody in Euro Aussie? Nobody in Euro Aussie? Oh, there we go. Andrew, 68, 46, and 19 still in. There you go. Anybody else? Just Andrew? All right. Good trade, Andrew. Nice to see you in the room, Andrew. All right, next one was the pound Aussie. All right. Pound Aussie was a buy at 93.80, 93.80. Where are you? Which is right down here. 93.80 right there for that target right up there, which is at 94.74. So you got about half of it so far. Yeah, I'm glad you're here. Sit with your back is enough to sit around. That's awesome. Maybe you'll start to London again. That'll be awesome. Our fast trackers are just waiting for you to come back. Right? Nobody in that? All right. Nobody traded pound Aussie. How about dollar yen? All right. All right. Back to here. And dollar yen. All right. So I got a little note on this one, I think. Yeah. So it says here, all right, I have it as a buy. That's because the chart said it was a buy. All right. All right. And there's a target. We'll look at it in just a minute. Okay. So, but here's a minute. Dollar is down. So be careful. It shows up, but could follow the dollar down. If so, flip the targets. All right. So, it showed up yesterday and on the dollar yen. Let me get it up here. I'm on it. And so there we go. All right. So it did do that. All right. How did I know that? I didn't know that. I got it. It's called experience. Experience gives you that gut feeling or that second sixth sense. All right, it was the entry price was at 148.30 right there, and the target was 149.68 right there. 149.68 right up there, and it went up to the ATR target, and I had it maybe going to the R7. All right, there we go. UJ Scott 64 and 48, well over 100 pips for Scott. Andy UJ 102.86, almost 200 pips for Andy. All right, anybody else? Got two traders in it. UJ up. All right. And remember, we had a live trade here yesterday to the downside on the break of the bear flag. All right. And now we know that it was a cup and handle. All right. Only two traders. I did trade it, but I can't count me. Nobody else. Just two traders. All right. We can't count it then. All right. All right. Now, live trade yesterday to the downside. Anybody trade that? Remember, I said it's not going. I don't like it. I don't like it. I'm getting out for break even. I got out for break even. How did the rest of you do? UJ, there we go. -4 for Scott. Okay, not bad. All right. So, well, he took a loss. He took a 4-pip loss on a trade that went 100 pips in the air. That's pretty dang good. Nice job, Scott. Where's the rest of you? There's the traders who traded. Chris, Rob, Trader Joe, Stephen, Andy, and Rick. All right, there's Andy, -11. Okay. We're on a dollar yen, JT. We're on dollar yen. -1.6 for Rob. We'll call that 2, -2 there. Break even for Chris. There we go. There we go. More like it. All right. Looks like that's it. What do we got? -4. Okay. Well, you took a loss. We take losses just like everybody else. We don't take very many, though, in comparison. And our losses are always very small, as you can see. They did a great job. All right, got a couple of session recaps to go through. Pound yen, all right, to the pip to its ATR, added about 10 more or so. All right, anybody trade pound yen up? Pound yen to the upside. Kay, you're usually in it. You didn't trade it? Okay. All right, so see, there was Larry nailed this yesterday. Hey, it's a cup and handle. There you go. Nice job, Larry, as usual. All right, nobody traded that. How about the New Zealand yen? Anybody trade New Zealand yen? All right, to the pip to its ATR, basically. Not quite there yet. Just missed it by 2 pips there. It's going to hit it before they're done. 63, 36, 19 and 3. Sweet, Thomas. Nice job. Way to go. Anybody else? Nobody else? Erica, what's the original time for learning this? Well, becoming a fast tracker is learning it all. All right. So, it's if you've been trading a while, you need to go do the beginner's lessons while you're here free and the first videos. You'll learn more on that journey right there than you have in the last 2 years, right there. Then you're ready you've got the basics down. We don't go through the basics in fast track. All right. And then you got the basics down, and now it's a matter of understanding the why. The basics tells you how, fast track tells you why. All right. All right. Here we go. All right. All right. All right. So if you traded something else, we'd like to see it. We don't count it, but we do like to see it. And Thomas, you're going to get it today. Here you go.
Go on, take the money and run. Go on, take the money and run.
There you go. Nice job. Great job. All right, back to work. Euro Aussie, are we going to get it? It's still a question. Not going to get a pullback on it, so it's not going to happen. All right, Euro New Zealand. All right, there we go. Now look what they had to do. They had to come down back in here to find buyers. All right, that's what they had to do. Don't forget, if you want this trade, your add-on, Erica, is above this 1.270. It's the second trade with 2 lots in it. All right. So it's a snowman. It's an upside down snowman. That's where we'll trade 1. This will be trade 2. This is where we make our money right here. That's where we make our money. Down here, this is where we trade as riskless as possible. Trade 1's job is to do only one thing, create enough profit to cover some, if not all, the risk of trade 2. And eventually it goes up and it's up 50 pips. You had a 30 pip stop on it. And now you're positive on all those currencies, 50 pips on one and 20 on the other. And now you hold the target. Trade 2 is well, it could be more. If your account's bigger, it could be 10 lots. It all depends on what your size of your account is. All right. But you got to find a way to trade 3 micros minimum. 3 micros minimum. If you don't have enough money to trade that, you got to fund your account to trade 3 micros. All right. All right. And you want to trade micros until you get the 65% win ratio and 35 pip average pip capture. Because when you do that, you're now sustainable for the rest of your trading career. All right. Yeah. 65% win ratio means I'm losing 35 out of 100 trades. That's right. But as long as I don't lose 35 in a row, I'm fine. I lose one, I make a couple pips, I make some money, I may lose one and all that, and 100 trades, 1 out of 3 is going to go bad. All right. Yeah. Andrew, Erica, fast track class is an enormous amount of information, but it will absolutely change your winning percentages as long as you follow the rules. That's right. Rule breakers get taken to the cleaners. Right. So this is from Zen in the Markets by Edwin Toppler. Right. You can break the rules and get away with it, but eventually the rules will break you for not respecting them. I just jump in. I never wait for a break hook and go. Oh man, I lost my account again. It's the 4th time I've blown up my account. Didn't follow the rules. All right. I just grabbed 5, 8, 10 pips and I'm a winner. Yep, you won the battle. You made money today. You lost the war. You got to be 90% correct for the rest of your life. Can you be 90% correct for the rest of your life? Only if you are the greatest trader in the planet. Only if you're the greatest trader in the planet. All right, what are we watching for here? We need a higher high. See, if they go up there and they don't put a higher high in, we're not interested. 1 pip above that is a big deal. All right, so let's see what they do. Then we need to hook back down. Trade 2 is already in above 76.92. All right, so 76.94 is where you put that entry order in on the Euro New Zealand. All right. Now, you can see where a fast tracker could have traded this already because they're not concerned about this line. I do things differently in here for new people. I'm here to be as conservative as possible. So, but a fast tracker would have traded at 1 pip above that close and reverse right there. So they're already up 6, 7 pips and they're just breaking out right now. It's got to put another higher high in there. It's very close. Let's see if it does it. If it does it, we're now interested in the bounce. If it can't do it, then we're not interested in the bounce because it could go sideways here. All right. So watch it. This is the nuances of trading, the things you learn when you've been trading 23 years, the things you won't learn in 2 to 3 weeks unless you're in here. All right. Not yet. While we're waiting for that, let's go see what the pound New Zealand's doing. Wow, it's come down pretty hard. Okay, so see, why didn't I? They don't find some buyers here. They're going to the next one. Where'd they go? Down to here. All right. Now they're at the fib and they're bouncing. Is that the real bounce? I don't know. I don't know yet. Could be. All right. So now on this chart, which is different than the other one, I need to see momentum. Bright green. All right. I need to see bright green. I got a green candle. I need to see bright green. That means participants are coming in. We trade with the follow through. All right. And it's very important that you understand that. All right. Most people do not understand it. It's very simplistic, but let me show it to you while we're waiting anyway. All right. So these are the tier one bankers. All right. They're called market makers. Why are they called market makers? Because they make the market. All right. If you add them all up, the top 10 equals 70% of all the Forex volume you see in the charts. 70% of everything in the charts as these 10 guys. Now, if you go down to the top 15, you're at 80%, right? At 80%, right? Now, they make the channels, they make the wall, they make sure the heart lines hit, they make the breakouts. They're the ones who do that, right? But they don't take it to target. Why? Their job is to create a market, and the follow-through's job is to take it to the market's intention. The follow-through is the 1,000 banks who trade between one another, not counting hedge funds and sovereigns like Saudi Arabia or something. These banks typically have only one or two traders per pair in each market, in each bank. Well, that's 2,000 traders. And they execute trades based on the structure of the tier one bankers. All right. They allocate 20 to 30% of their funds in the Forex and generate 40 to 60% of their profits from trading currencies. This is who we trade with. All right. But we got to know the structure that the big boys have done. This is why I'm looking for participants. That's the interbank market. If the interbank market does not come in here, it's not going to target. If it doesn't come in here, all right? All right. So it's the same thing here. All right. So a big boy is probably going to have to make this happen. All right. You see, there's the big boy, the white dot. That's the big boy who came in to push it through. He got it through, but then there was no follow through. So he had to pull back down here again. All right. Now he's doing this, a close and reverse, because everybody's on the sidelines. It doesn't take a lot of money. All right. But he can't, they're not breaking it. Just like us with entry orders up here, we're not touching it until they get up here. Right. So we're trading with the follow through. Understand that. Your job is to figure them out. And how do you do that? You first figure out the tier one bankers. What are they doing? That's what we did the first walk through the charts. Our job is to eliminate any currencies that can't give us a return on investment today, so that we don't waste any time on stuff that isn't going to, well, I always trade the euro. Yeah, but you got 12 pips left in the euro. Well, I didn't even know that. Why didn't you know that? Well, because I don't know anything about the ATR. Okay, now you do. Now what are you going to do? You know about it now. You got to put it on your charts. Well, that means I got to do the work. Yeah, it's an hour a day. Have fun. All right. But if you don't do it, you don't have the information, and it means you're not trading, you're a gambler. Trade with the correct information. When you do your ATR work, you're going to go, oh my gosh, they do this over 90% of the time. Yep, that's what they do. That's what they do. That's the why of the market. All right. Your job is learn how so you can find the why. All right. Let's see here. Nothing happening, as you can see. We are not interested in the sell at all. But remember, we do have divergence here. All right. So you can see that we got divergence right now. So this could be the reversal to the downside. All right. So how do we get ready for that if that's the case? All right. We go down here and see that's why we didn't trade, just because we got a little arrow up there in a green candle. All right. Everything's stalled out. Put slope support across this bottom right here. And if you break in this area, okay, do I have to set it up now? No, I don't have to do it now, because it takes 20 minutes to do a break, hook, and go. I got plenty of time to do that. I'm still a buyer at this point because I'm above the zero line break of the MACD. So I'm still a buyer, not a seller. All right, pound Aussie, question mark. You're going to give us it. Yeah, there we go. All right, now we did pull back. But what we see is the other currencies are pulling back also. All right. Is any of them bouncing? No. Should I take a bounce here just because I hit that 55 pips? No. Do I have any follow through in here? No. What do I got? I got bears. I got bears. Now, bears perform a function, which is to get down to the bottom. All right. And that's why they do pullbacks day in and day out. Pull back to get to the bottom, to go again. Pull back to go to the bottom, to go again. Pull back to go to the bottom, to go again. Pull back to the bottom, to go again. Maybe this is it, but I don't see any follow through here. None. Here you can see the follow through. You can see the follow through. You can see the follow through. All right. Who set that up? The big boy. He did the pullback for them. Big boy to a close and reverse. All right. Who did that? Tier 1 banker. All right. Where's the follow through? Here, here, and here. That's who I trade with. Are they here? They're not here. All right. So what do? Sit on my hands. Ozzy was also 2 pips of his daily ATR. Yeah. And a lot of traders don't understand the ATR. Right? So let's go take a look at it. Well, just saying it. So the average true range is at Wikipedia. I'll put it in the chat. You can go copy and paste it and look at it yourself. Right? So here, the range of a day's trading is simply the high minus the low. The true range extends itself to yesterday's closing price if it was outside of the range. All right, so there's the calculation. I don't want to figure that out. Here's the calculation. All right, they say that this formula can be simplified to this. That's simple right there to a math guy. To me, I'm going, it's gobbledygook right there. All right, all right. It's the most recent period's high minus the most recent period's low. And the absolute value of the most recent period's high minus the previous close. And the absolute value of the most recent period's low minus the previous close. All right. So do you want to do all that? I don't want to do all that. I want software to do it. All right. Yeah. Simple as we get it for you. It's the high minus the low, but it's the high in the future and the low in the future. That's why we use the ATR. At New York Fix at 5 o'clock, it changes. All right. And if that is the low, that's the low for the day. And if it goes up, you know where the high of the day is. That's the limit up here. And this is why we don't trade unless we have 55 pips to that, because it's a statistical probability that all it's going to do today is whatever the ATR is. And you just watched it as you saw we going through charts as they went to the ATR right there. What they do here? To the ATR. What they do here? To the ATR. Gee, I think they're going to the ATR. All right. Pound dollar to the downside. Didn't get to the ATR, and now we got a bounce. Ooh, there we go. Dollar Swissy didn't get to its ATR. So what are they telling you? We're running out of people. We're running out of steam. All right. Larry, GU pulled back to the 618, did a close in reverse and had 55 pips to target. Bulls are pushing up and hit the 55 entry again for a sell on the 10-minute chart. There's Larry. I wonder if Larry's on top of it. What do you think? You think Larry's on top of that? And they're running out of time as well. That's exactly right. And I'll put my headphone on. You can talk, Jerry. You don't need to type.
I don't have much to say. I'm just scouting, making sure everybody's in here and got everything going on. Just been answering emails and getting people running. So good morning, everyone.
Good to
I
see
could
you,
have said
Jerry.
good morning to you at about 1 o'clock this morning, but I'll say good morning to you now. So good morning, and I pray everybody's paying attention and learning. Did everybody bring a friend today? Doesn't look like it, but everybody should tell somebody that there's something going on. There's something happening here. So y'all just enjoy the day. Bring a friend or an enemy next time. God bless. Have a great one.
Speaking of something happening here you go.
There's something happening here. What it is ain't exactly clear.
Something happening here. What it is ain't exactly clear.
Chris is
Play that
asking
song, Graham. That's a
what's
great
the next
Buffalo
biggest thing?
Springfield. Or is that? It's either Buffalo Springfield or Crosby, Nash and Young, or Crosby, Stills and Nash. I'm not. Buffalo Springfield. Thanks, Steve. Yeah. All right, we're showing our age, Steve. Buffalo Springfield, you know that. Written by Stephen Stills. Yeah. All right, I'm going to put the channel on here because I got one. Heartline, 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 heartline. See how they prove that heartline? See how they do that? Because a banker's making that happen. He needs to hit the heartline so everybody knows what the channel is. So he'll do it. All right. There's an agenda they're doing. Hour after the session is over, You know, it depends, Yuli. I mean, if you're in a Euro Aussie or you're in New Zealand, the next session is Sydney, so you want to leave those on because it could move way before Sydney and then finish in Sydney. All right. If you're trading a yen cross, you want to get them off. If you're trading a pound or a euro dollar, a pound dollar, or something like that, a major, you don't want to get out of it because it's not going to move until London, which is 15 hours from now. See? So, you know, it's not a black and white answer. It's not a black and white answer, right? Now, remember, so that's a great, there's a way to do it for you though, all right? Here's the way you do it. And remember, since it's two lots, even if you don't get trade one, you still pressed your winners. You didn't take one trade up there, you took two, all right? So, all right, we're back inside this wedge, all right? But so there is a way to do it, which is to, where was I going with that? The question is, okay, Mr. Currency, Miss Currency, if you break into this area up here, do I want to be in? If you break in this area from where you are right now, do I want to be in? And if the answer is yes, there's the trade right there. And you leave it on. Right? If the answer is nah, I don't want to do it, then you take it off because it's your deal. It's not anybody else's. That's why it's not black and white. People with higher risk tolerance will leave all of them on. All right. And what you're trying to do is you're trying to build a position, all right? And you know, a lot of people just don't understand that because you can build a position and then how long can you stay in a trade that's going your way? As long as it goes your way, all right? So let me find this here. Here we go. So this is one of our fast trackers, Frankie. All right, and he trades the yen crosses. All right, because he works all day, so he only has the yen crosses to trade. I want you to see he's got 7,000 pips. He's still in. Look how long he's been in. Like right over here in this area, right over here. That's good, right there. Days, days, days. Why? Because the currency keeps going his way. He's up 7,000 pips. All right. So I asked him to send that to me. He said, as long as you block out my account, you're welcome to do that. So I did. Blocked it out, and there it is. Now you can see he never trades more than 3 minis at a time. 3 minis, 3 minis, 3 minis. The only one he did bigger than that was a standard down here on the euro pound. The only currency outside of yens that he trades. So what you're trying to do there, that's where you got to work up to. All right, you're not going to get there in 3 weeks, but you can get the minimum you got to try to get to is 3 lots, 3 positions. Try to get 3 in, and don't get into the habit of moving your stops too quick. And in fact, later on, as you become a well-versed trader, you don't even move your stops at all until you get near target. No, that's why they have to do in the chart. So Erica asks the question. Seems the big banks are in a conspiracy together if they're causing the market in concert. Do they call each other with ideas? No. The reason for that is that that's called price fixing and you go to jail. In fact, I was a witness in the LIBOR scandal about 10 years ago, right? And a bunch of traders over in London, HSBC, and those guys all had a chat room, and they were collaborating on trades, and they got caught, and they all went to jail, right? So here's the thing. They do it in the charts. Therefore, the information is being telegraphed to every trader on the planet. The difference is, how does the trader know how to read the information? That's what we're all about, showing you the information and how you can read it and apply it. Jamila, there are no dumb questions. What is the difference between the Euro USD and the USD Euro? No, there is no such thing that I know of the USD Euro. It's always the Euro against the USD. All right. So if you think the euro is going to strengthen, then you would sell the US dollar part of it. That's what you're doing when you do a short on the euro dollar. And when you're doing a buy, it's because you think the dollar is going long, and that means the euro by default has to go down, and that would be a buy. All right. All right. The USD EUR, the base currency on the euro is always against something. You're trading one against the other. All right. So simultaneously, you're buying one currency and selling the other. half of that. All right. So the base currency on the euro is the US dollar. So euro US dollar. The USD EUR. The USD doesn't exist. It's the EUR USD. Right. That's correct. That's right. All right, we're starting to get some good signs here because you got a close and reverse that's about to break out again. All right. Now remember, you can trade it as a close and reverse, 1 pip above that. Well, maybe I go up 2 pips and now I'm above here. All right. Could I do that? Yes. Depends on your risk tolerance. You can do that on one condition. Do you have your entry order in? Well, I don't have my entry order in yet. Then you can't do it. See, that's a rule. And that rule will make you money if you'll live with it. That rule will make you money. I do not make a trade unless I already have trade 2 in. I do not do it. It's a rule. Because the secret to being successful, the secret to sustainability, the secret to bringing your account up is pressing your winners. It's the secret. Everybody wants to know what's the holy grail in the Forex. There it is. You got it. You got it free this morning. That's it. All right. It's just executing that type of trade. That's what bankers are doing. All right. They are manipulating the market, but trade 1 is the market maker and trade 2 is the follow through. Oh, I'm starting to get it. Yeah, now you're getting it. Trade 1 is the market maker. Let everybody know what the agenda is. All right. If the euro is going down, that's exactly correct. And that's why you have to have a dollar currency so you can see it. Now, the dollar was going up. Is it going up now? No, it's not. It's coming down. All right. So now there are 2 options to a down. They come down for a pullback to go higher, or they're reversing, and that's the top. Do we know what it is? We don't. Therefore, we have even more caution. Right. Now, this morning, when this thing was screaming up, there's no question about we're going up. See, we don't have any, there's no question. We're going up. That's it. We're going up. We're going up. All right. Then we top out and now we're coming down. Maybe we're bouncing again. I don't know. We'll see. Maybe for a higher move. So we'll see. You got a 0 line break down in here, or the 0 line up, or that's up. We're above the 0 line, so we're officially a buyer. We're not a seller. We won't be a seller till we dip below this line. All right, doesn't mean we can't sell if we understand the real estate of the day. We can sell if we understand that, and that's again that comes back to the why of the market. Anybody can learn how to put a fib on, how to put a channel on. That's not what's going to make you a trader. Understanding the why. Right? We don't know. That's the point. We don't know. Is it a sell or is it a buy? I don't know. I don't have a clue. It's bouncing here. It could be a buy. Got 2 red candles off of the top with lower highs. It could be a sell. What is it? I don't know. I won't know yet. I got to wait. Now, I don't have to wait a long time because if the other currencies are structured, many times they'll move before the dollar. That's what happened in the dollar yen. Dollar yen moved last night. I got in last night, and right after I did alerts, it started up, and I'd already had an order in. My entry order is already stacked up here. It started right away. All right. Was it no brainer? Got a 0 line break to the upside with a T3 break. What is that? That's 82% in my direction. Did it go in that direction? It went 100% today in that direction. Here's the 0 line, the T3 break and the 0 line break simultaneously. Those are pieces of information. They're not trades. They're not trade setups. They're the things a professional trader looks for to determine whether he should be in the market or on his hands sitting on them. All right. And this is where traders miss it and this is why they gravitate to indicators. Wow, that's a lot of work, man. I just want something that says buy here and sell here. All right. Look, it's bright green. That's the reason I'm buying. That's not the reason to buy. All that tells you is the follow through is here. All right. Will they go to target? I don't know. They went right to target. All right. They're sent on the IC. I sent them out on the info center right here. This is where I sent them. And so you're up here. If you got alert, this will be a big hand saying, stop, you got alert. You just go down here and you go like here. Oh, there they are from last night. All 4 of them went. All right. All four of those went last night. All right. Get 4 a day, Monday through Thursday. We're not open Friday. By the way, tomorrow is Friday. I will be here because we have an open house, but it's going to be a Q&A. We do not trade on Friday. Do not even have your broker station open. All right. We do not trade on Friday. It's Square Up Day. What is Square Up Day? That's the day that the bankers come back out of the market. Why would you want to be going into the market when the bankers are coming out? Makes no sense. Now, you can trade London tonight. You can trade Asian tonight. It's Friday over there, but you can't trade the New York. The New York is the end. That won't open again till Sunday. A lot can happen over the weekend. Crazy people fly planes into buildings, right? Stuff like that. In the old days, we used to stay in. We don't stay in anymore, unless you want to get run over. There you go. So don't trade on Friday. All right? It's just that simple. All right. Are we going to get anything here? Yeah, we've been waiting all morning, see? And people think, oh my gosh, you should be making hundreds of trades. Look at that. There aren't any trades right now. Right now, there's nothing. The two that we think might give us something aren't doing anything. All right, this is finishing. If we'd have been in this, it'd have been great. All right, but look at the information you're getting. It makes a turn down here, and what do you see? Oh, wow, I see a big boy came in and pushed it up. A big boy pushed it up to break the MACD to the upside. A big boy came in here on the break of that resistance to push it up. He hits the T30, stops it down. He says, "No, we're going to target." He puts more money in, and there's the follow through. Says, "Okay, thank you, we'll take it." And now the follow through is taking it to target. That's what's happening. Wow, that's crazy. Yeah, it's great. All right. Now, if you're in anywhere down here, you're fine. But if you get up here, all right, all we got was one big candle. Well, it's got to pull back, all right, in order for us to get it. And then it has to still have 55 pips, or we can't touch it. Neither one of those. We did get a little pullback, but we didn't have 55 pips left. So it wasn't an opportunity for us. Well, how did you miss it? If you're down in here, you got it. And these are your entry order right here would be your second trade right there above the T30 for 60 pips up there with two lots. That's 120 pips, but was whatever you made down here. All right. Hundreds of pips, not 5, 8, 10. Get that out of your head. All right. You see, oh man, it's going against me. Oh no, it's going to go against me. I'm up 12 pips. I'm going to click it out. All right. What did you just do? Here's what you did. Right brain took over. Fight or flight is in the right brain. All right, our divine creator created that in us because we lived in a world with dinosaurs and all kinds of crazy stuff. All right, so he created that in us. It's still there. You made an emotional decision. All right, you didn't make a business decision, which was your plan. The left brain is logic, analysis, math and science, knowledge and facts and detail, but it has to be taught to trade. That's what doing the work does. It teaches the left brain not only to understand it, but to see it instantly. It's called reticular cognition. Reticular means I see it. Cognition means I understand it. Reticular cognition. There's another thing called reticular activation. Reticular activation is how you can be in a room with 100 people in it, and everybody's talking, you can't hear a thing, and all somebody says, "Erica." You hear Erica. Why? Because you have reticular activation based on that name because it's yours. You didn't hear anything else in the room, but you heard somebody say, "Hey, Erica." See? That's called reticular activation. All right? We use those things to trade. All right? Don't get it in your head that if I just get a moving average crossover, I'm going to make it. You aren't. All right? So to the left, to the left. Yeah, there you go, trader. All right, so not enough room left for us up there. Pound Aussie, it bounces, but see that? There's no follow through coming through. No follow through. All right. We now don't have 55 pips. See, you had to get it down here. Right. Notice where they did it. They took the money right there. That's right. Wick is where they bought, right at 55 pips, because they can't trade without 55 pips. All right. So we don't have 55 pips left. So that's gone. Oh man, he waited all day for that and he didn't even get it. All right. Yep. All right. We're trying to break out of this pennant. Are we out? No. There's the trade. I see the trade. I see where trade 2 is. I see where trade 1 is. Do I have a trade? I don't have a trade. I'm still stuck inside the pennant. Dang, got it. Pound New Zealand. All right, now we're getting a little bounce. All right. And we got some follow. So you got an arrow there. That means in order to put that arrow in, that means more money is in this candle. It's a non-contested area, as you can see, because they already took this out. There's more money coming in this candle because of that green arrow than the previous 6 on a 10-minute chart. 1, 2, 3, 4, 5, 6. Okay. More money is in this candle than in any one of these 6 candles there. That's all it means. But what are we looking for? We're looking for money to come in to tell us whether we want to enter the market. All right. The charts show you that. That's what they tell you. You won't find it on MT4. You won't find it on TraderView, Think or Swim, or any of those things. You won't find it. We're the only ones that I know of in the world who have figured out how to do it. And I didn't figure it out because I'm not a math guy. Jerry figured out how to do it. And it takes 24 algorithms behind the scenes here, which you can't see, to make that happen. There are 24 different things happening to make an arrow show up, or a white dot, or a painted candle. That's information overload if you wanted to try to do it yourself. You can't do it. You can't do it. And that's why the charts are locked up here, because that information is locked, so you can't mess with it. We used to not have it locked, and people go, I like this setting better. I like this, and they would change them all. And then they go, I can't trade with these charts at all. It's because you changed them. You changed them. You're not changing trading our charts. You're trading somebody else's. They're yours. And that's the problem with MT4 and TradingView. Who's in charge of building the chart? You are. What are you going to put on it? Well, the only 2 things you should have on a chart, if you're going to trade on MT4, the only 2 things is a MACD, which is 66% right if you get a MACD cross, and you should have an ATR. So you know what that is every day. ATR is an indicator you put on MT4 or TradingView. But you got to do the work now. It'll be hidden down here. It'll have a little number, and you got to figure out what that number means. All right. Or you just use us, because we got it all set. We pull this information every day. Jerry pulls this information manually for you guys. All right. That's why there's a charge. If you just want the ATR, there's a charge, because we got to do this manually. He's got to sit at the computer every day at 4 o'clock and pull this information in so that we have a nice little widget that does it. See that? All right. I don't think you should give that away. Well, we can't give it away because we have time in it. Not only do we have money building the widget time, we have time every single day that Jerry has to pull that information. For free? No, we ain't going to do it for free. For our subscribers? Oh, yeah, they can have all this that they want. All subscribers automatically get this. They get the alerts. They get all that sort of stuff. All right? It's a value add. Yeah, thanks, Larry. GU pulled back, no entry because it's too late in the day, but it's back there again, right? And they may all reverse here. What's the dollar doing? Let's go check it again. How many times we checked it today? 6, 7 already? All right, what's it saying? They found it's a wick to the downside. What did they find? They found sellers. They didn't find buyers. Wow, we make it big so you can see it. What did they find? Sellers. What do we have before that? Close and reverse. All right. Was it telling you we might very well go down? Might very well go down. All right. Everything we're doing is based on it going up. Wow. Now, if it goes down, the GJ will continue to go up because you got to know your correlations. If you don't know your correlations, you don't know how to figure that out. All right. This is why you got to learn it. All right. So here's the correlations. All right. And if you want it, it's on the IC. All right. This is on the IC. Now, right now, EG, EA, GA, and EN, which normally go with it, for years on end, the last 4 or 5 months, they've gone against it. All right. So if you're not a trader, you don't know that. All right. Oh, it goes with it. I'm going to trade up. No, then you get whacked because you don't know that it's flipping. All right. So right now, and they could go back to going with it anytime they want to. All right. GN goes half the time with the dollar. Pound Swissy goes half the time with it. All right. Pound Aussie. So if the dollar's going up, Pound Aussie is normally going up. All right. EA is normally going up. Here's the base currency: dollar CAD, dollar Swissy, dollar yen. Well, the base currency is the dollar. So if the dollar's going up, most likely it's going up. Now, this means typically. That doesn't mean it does it every time, because it doesn't. It does what it wants to do. All right. See you, Andrew. All right. So is it down? I don't know. Is it up? I don't know. What should I do with that? You should sit on your hands. That's what you should do. Well, no, I want to trade, man. I just want to go push the button.
Hey, you push the button. I didn't tell him to push the button. Did you tell him to push the button? No, I didn't tell him to push the button. I didn't tell him to push the button. You shouldn't just go pushing buttons. You don't go around pushing strange buttons. I tell you, don't push the button.
Don't push the button. Don't push it. Wait for your trade to come to you. All right. Yeah, we wanted this trade over here, but it had to do something, and it hasn't even done it yet. It's got to break, hook, and go. All right. We're just now starting a break. The hook will be 10 more minutes after this is finished. All right. That's 20 minutes before we get this opportunity, if we even get it. If we even get it. All right. And we're cautious of it. Why are we cautious of it? Because we have divergence. You have divergence in the chart right there, right? Which is typically goes to the downside. Oh, wow, I didn't even see that. Yeah, you got to learn that. This is how you learn the why of the market. You learn how to do something, then you understand why it's important. All right. I get in a pennant. How many pennants? Have you done 300 pennants? No, I haven't done them. Well, we have a course on it, but you can just go to the website to chartpatterns.com and just start. Do 300 of them. All right. So pennants. Here we go. Click it up. There it is. Well, we got one of these right here, right? I think that's it. Maybe not. Let me go to 60. Gee, it just looks like a ABC here. Can everybody see that? A, B, C. All right. That's what that says. All right. Symmetrical triangle. What does it say? You came in at going down, means you're coming to going down. All right. The chart today says bulls are here. We're trying to buy. All right. So what would be the conclusion? They're trying to buy so they can go sell. Does everybody see that? They're trying to buy so they can go sell. Now, if they aren't successful, can they do this sell right here at any time they want? Because they're structured to do it to the downside. See that? Oh, wow. I didn't know that. Yeah, that's understanding the why. All right. All right, we're in a range. All right. MACD tells you you're headed up. All right. So there's information going up. Which is it? That's why you got to have it prove it. It proves it's going up there. You want that trade because it gives you 3 positions to the top for 150 pips or more. Do I want that? Yeah, I want that. Will I get it? I don't know. They're not giving it to me now, that's for sure. And I got a lot of worry because of the sell. All right, not worry. I don't get emotional about this. This is just, these are business decisions. It's no difference than what you do in your business or did in your business or who you work for. All right. You keep your job because you make good business decisions. If you're a business owner, you keep your company because you make good business decisions. If you're going to be a successful trader, you got to make good business decisions. A trade is a business decision. I'm going to risk my money. Buying inventory is a business decision. I'm going to risk my money. I don't know if I'm going to sell 1,000 widgets, but if I don't have them on the shelf, I won't sell any. So I got to bring 1,000 widgets in to sell. That's what I do. All right. It's a business decision. It's not an emotional decision. All right. I'll give you an example. Oh my gosh, the copy machine has no paper in it. Oh, what are you gonna do? Do you do that when when it runs out of paper? That's an emotional response to no paper. That makes no sense at all. You go get some paper and put it in. All right. But when we trade, we do the opposite. We get emotional and we make emotional decisions. And the reason we do that is because we don't have any rules. Thanks, Robin. All right, it's trying. Okay, now you see some follow through. Now remember, we can trade a New Zealand and a pound. Why can we trade it? Because the next session is the Sydney. All right. Yeah, it's a game. Exactly right. It's a very big game. It's the largest legal cash business in the world. All right. It's based on speculation. Some people think it's going up. Some people think it's going down. The ones who get it right make money. The ones who don't. It's not rocket science. All right. All right. So in the Forex, you have bankers manipulating it. In crypto, you don't. You just have herd mentality. All right. Now, here's the deal about bankers. All right. Once the banker sets the agenda, that sets the herd mentality. See? All right. So there's nothing here because we don't have 55 pips left on the pound Aussie. So you see, you had to take it in. Now you see the money coming in. See the follow through? What's that tell you? The money's here. If you enter down here on the 55 pips to there, if you enter there, do I bail? No, money keeps coming in. No, money keeps coming in. MACD keeps growing, going up. See how I keep making a business decision all the way up? Now I don't have this trade because I didn't take it down here. So I don't have anything. All right. But what if I left my second position in up here? I'm about to go in, if not already in, with 2 lots to the target. And maybe this one will go. Maybe. Over to Euro New Zealand. Now we're getting a breakout now. There we go. Now we got a firm breakout here, all right, to the upside. All right, MACD tells you you're a buyer. Let's go check the 3 Musketeers. Do they say the same thing? Yeah, we're a buyer. 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 Guess what? We're a buyer. All right. Do I have trade 2 in? Do I have it even figured out? Okay. So it's got to hit this 1270 and pull back down. And until that happens, because I'm too close now, if I already got my entry order in, I'm fine. My entry order is there for trade 2. I'm fine. And there's 55 pips there in this one. That'd be 110 pips with 2 lots. Now, what do I want it to do? I want it now because I couldn't take it there because I wasn't here for the break hook and go. I needed to pull back like this and then bounce. That becomes trade 1. That becomes trade 2. All right. Where do I move my stop? There. Where do I move it again? When I get close to the target. It's a 1-to-1 risk to reward ratio. It's about execution. There's no emotion in this thing. It's about executing. All right. Now I missed that opportunity down there. Right here. I know I didn't miss anything because it just broke out on that candle. So I didn't miss anything. Right. Now I can't trade it here because my rule is I don't buy at the top. I can't buy here. Let's hope it takes this 1270 out and pulls back down. Well, how long is that going to take? 20 minutes. Am I in a hurry? No. See that? You're up 12. Scott made the trade on the close in reverse. Nice job. Just a single line buy. It's just flags are real easy because you can do them with just a pen. You go back in the past here, and you can do them on any chart. All right. Well, you can see here, there's a flag right here. You just have a little tool. You can draw it manually, or there's the flag. Right. How did I come into this thing? Well, the whole thing was up here. All right. That's how I came in. How am I coming out? It's going to equal. There it is. Yeah. Okay, 1 done. 299 more to go. All right. All right. Flag. How did I come in? Not much. This is not gonna yield much because that's all they did. All right. That's all they did. See, that's it. All right. Then they hooked, close in reverse, and finished the move to the downside based on what's happening back here. All right. All right. 2 done. 297 more to go. Let me show you what it looks like when you do them correctly. It's one of our traders. I think he's here today. All right. All right. He was doing pullbacks. All right. And here's the data. All right. When he did them, 91% of the pullbacks that he found targeted the 618 and went to the target. Is that a good number to know? That if I get a pullback, 91% of the time, I'm going to get to the 618. All right. 4% pullback and whatever that is. All right. Oh, to the 1, back to 0 and went. 5% went to the 214. 20% turned at the 382. 15% at the 50 and 21% at the 618. All right. Wow. All right. 16% only at the 7186. All right. You don't need a fancy, Abdul is an Excel spreadsheet guy. He has them all in Excel spreadsheets and they look beautiful. Yeah. So yeah, you got to keep track of it. And by the way, it has to be done at once, Mike. So if you do 100 and say, I'll go do 100 today, 100 tomorrow, and 100 next day, you haven't helped yourself at all. You may have hurt yourself. Right? Because what happens is when you're going to work on something, your brain will take and build a little, hold on, let me see if I got a graphic for it. I do. I know if where I can find it or not. Let's see. Let me look. Yeah, I don't see it real quick. I'll just draw it. All right. So when you decide I'm going to work on poles today, I'm going to work on those flag patterns and get those done. All right. So you start out and you do one, and your brain immediately goes file, pole, flag patterns. All right. And as you do them, it starts putting them in here. 1, 2, 3, 4, 5. I do 100. I don't have enough. My brain needs 300 of them. If I don't have 300 in here, it can't figure the statistical probability. See that? So you got to do 300, and then you got to take a day off. Why do I got to do that? Because your brain now needs to build a neural highway to that folder, and that's what it does when you sleep. So the minimum is you got to sleep. Well, you can go all, because the market's fractal, Chris. You can go all the way down to a tick chart. You can go to a tick chart. You can easily get 300 flags. You know, just go down a 1-minute chart, and you'll get hundreds and hundreds of them in here. See if I can find this. The problem is you get big long ones like this. You can see them. Here's a flag. I came in like that. I'm coming out like that. See? So there you go. But you have to block off the time to make it happen. Yeah. All right, go back up here, and GA. Well, GA is off the table, but let's see what it is. Oh, you're right. All right, so that was the 5 o'clock candle, but we put a low in after that, so we got to adjust it to the low. You're 3 pips away. Gary, nice, good heads up there. Thanks for that. I should have changed it when I was on the chart. I didn't do it. No, you're just 3, 4 pips away. I know. We never got a shot at this because it took off on unemployment and never came back down. It went down a little ways, but not enough to give us 55 pips. You'll watch it. It'll go right to it and stop dead. They'll know exactly where that is because they make the ATR every day. Who makes the ATR? Bankers. Do bankers know what it is? Absolutely. They know what it is. Do I need to know what it is? If the bankers know it, I got to know it. What else do they use? They use fib extensions. Do they know the 1,000 to the pip? See? Oh, I got to know where that is too. See? There's also a 60-minute pole trade. Okay. So he's talking about this. Gary says, okay, there's one right here, right there. So whatever this is right here is what it's going to do on that breakout. Gee. Why? That's why you got to do flags. So you know the statistical probability. Is it going to go to that? Well, I did 300 of them. I know it happens over 90% of the time. All right. Or like the guy who did that 300 is 91% of the time and went to the 618. All right. So he knows what the statistical probability is. If you know the statistical probability, the decision to make a business decision on whether to enter or not becomes a whole lot easier because I know the exit before I make an entry. All right. And we never make an entry unless we know the exit. Never, 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 never. All right. Best said it best. All right. Dumb money finds an entry and then starts looking for an exit. That's why you get emotional. Oh, let's go against him. Check it out. Why'd you do that? You got 95 pips in front of you and it's got a pullback to go up. Well, yeah, but I was scared because I don't know where it's going. Then you're not trading, you're gambling. All right. We find an exit and then we start looking for an entry. We do exactly the opposite, what retail traders do. All right. I don't feel bad. Everybody does it. All right. I got a t-shirt that says that. All right. Everybody has done it, but you're in charge of changing it. And I can tell you, but I can't make you change it. I wonder if they know the 1,000. I don't know, Scott. It's so lucky. It goes right to the 1,000. All right. And it's still got room to the target. What should I do? Well, it's telling you we're going to go to target. If I'm in the trade, I hold the trade right underneath that close and reverse. That's where my stop is. All right. Why would I do that? Because I'm willing to risk that little bit for that and maybe all the way to the top of the range. All right. So we'll see. That guy Scott, he's so lucky. Exactly right, Joe. Going, I missed one up here. Okay, they got it. All right, we're done for the day. Let me do a session recap here. All righty, this is a session recap for the 8th day of February. This morning we watched as the dollar index went up, and we had unemployment, which extended a little bit, and now we got a close and reverse to the downside. You can see the bears are coming in. You also have potential convergence to the downside, so this may only be a pullback, as you can see, for the downside move. All right. Now, it could also be a bounce point here for the upside move. So what are we waiting? We're waiting for that information. If it breaks below the fib, we're a seller. Breaks above this line, we're a buyer. In here, we're in no man's land. That's no man's land. All right. Nobody knows. And because they don't know, they're not going to move the market. All right. So you're not going to miss anything. That's what happens. Traders think they're going to miss something. You're not going to miss anything. If they don't know, they're not going to move the market. They're going to sit there and wait for it to get clear. All right, that means that's what we got to do. All right, so dollar maybe weakness, maybe strength. All right, so when it was strength, the euro went down. All right, now it could be weakness, which means euro is going to go up. The target is down here at 107.22 if the dollar bounces and goes up, and the ATR on the euro dollar is 67 pips. All right. Over the pound dollar, it's pulled up twice now, Larry said, to the 618. All right. And maybe trying to make a turn to the downside. It's too late in the day to trade it. Our target is down there at 25.50 right there. Pound dollar has an ATR of 87 pips. All right. Now, don't forget, if dollar goes down, this is going to break out and go up in here. All right. So you got to wait for that to prove what it's going to do. All right. Swissy. All right. Swissy's making the turn here. Follow the dollar up. It's got a low ATR. Dollar Swissy's only 67 pips. All right. But you've got really clear divergence here. See how clear this is? This is really clear. Yeah. All right. So it's a high problem. Remember, the Swiss franc is pegged to the dollar. All right. So no matter what, it's pegged. It's not floating against it. It's pegged to it. If the dollar goes up, Swiss franc goes down. If the dollar goes down, Swiss franc goes up. All right. So we trade the base currency, which is the dollar, however. So if the dollar goes up on the dollar index, we're trading the dollar Swissy up. Well, now, what about the dollar now? The dollar, we don't know. Is it going to go down? I don't know. Is it going to go up? I don't know. So that means I don't know what to do on the Swissy. All right. But I got a heads up to watch for the sell. All right. And you can also see that we could certainly make a case that it's a rising wedge. All right. And a rising wedge is a sell sign. All right. So, yeah, be careful, folks. This is going to really turn to the downside. All right. Dollar yen. All right. We topped out up here. All right. And looks like they're starting to exit right now. We got a little room to the range top. They may want to take that range top off first. And MACD says we can certainly do that. All right. Remember, you got a zero line break and a T3 break here. When that happens on our charts, it's 82% going to go in that direction. So you know right here at the break here that I have an 82% chance of going up. Now, I also know where to go because I know where the ATR is. This is going to be the day chart candle, high, low. I know where that is before it ever happens. That's how you trade and make money. If you don't know, then you don't know. And now you're at the whim of the market. All right. Nothing to do till tonight. Watch that dollar like a hawk because the base currency is a dollar. 117 pip ATR. Aussie dollar to the pip to its ATR. Gee, I wonder if they knew where it was. Daggone it, there's another one that went to the ATR and stopped dead. He's so lucky, right? Aussie dollar, 53 pip ATR. What do they do? 53 pips exactly. All right. Euro yen. All right, euro yen, 117 pip ATR, I think. No, it's 113. 113 pips to the pip right there. They've now put in 2 extra pips, 115 pips. Knew that yesterday. All right, that's why I sent the alarm out. And traders did make 58 pips. That was their largest trade, 58 pips on it. So nice job, everybody. All right, now what do we got to do? We got to wait till 5 o'clock. If the dollar keeps going down, this is going to go up. All right. Pound yen, same thing here. Where did it go? To the ATR. Gee, and they put an extra 25 pips in above it. So the ATR is going to go up from 122 probably to 126 tonight. All right, because it's divided by 14 days. So 20 pips divided by 14 days is 1.5, 2 pips max right there. All right. So wait and see. You got a day chart top up here. So watch for that because there will be sell limits sitting on that day chart top. Why would that be? Because of risk reward. They can risk 15 pips down there and be in the very first part of the reversal for 800 pips to the downside. All right. So there will be sell limits sitting there for the first movers. All right. So be careful. All right. Pound yen, 122 pip ATR. New Zealand dollar. All right. Still got a little ways to go to its ATR. It's got a low ATR. Barely can trade it now. 54 pips. See, so you can't get 55 out of it. Target is at 60.70 down there with 54 pips. Aussie yen. All right. Aussie yen, we're waiting for the breakout down. Hasn't happened. If it breaks, we don't have 55 pips, but we'll get a new ATR after 5 o'clock. Aussie yen has a 64 pip ATR. That's 2 T30s, 1, 2. So you're looking at coming down to 96 tonight if it breaks out down to 96. All right, over to Euro Aussie. Almost at target now. Watch this. It's at a top here. That's what's slowing it down, plus a fib. You have 30 pips there left. That's all that's left in the deal. And you can see MACD says, hold it, hold it, hold it. All right. And over here on our confirmer chart, the confirmer chart says, let me get it up here. Confirmer chart says, stay in, stay in, stay in. See where it tells you? You need to be in this trade. You need to be in this trade. You need to stay in this trade. Why? I don't have any wicks. As soon as I see a wick, I move my stop. I don't have a wick. All right. But I'm aware of the fact that I'm at a top. That's my job to know I'm at a top. So the next candle may give me a wick to the downside. All right. So that's how you use that one. I told you, trade this thing, trade it. That's what it's for. All right. Let me get it over here where it's even back up over here. There we go. All right. All right. Target is at 66.21 and Euro Aussie has an ATR of 105 pips. Pound Aussie, all right, just shy of target right now, only a couple of pips. No, it hit to the pip. See that? See that wick? To the pip and stop dead. To the pip. Do you think they knew where it was? Gosh, how many of these have you done today, Scott? I don't know, but I've done a lot. And it ought to be enough to prove to you that I better be using an ATR. All right. No, I don't want to use your charts. Okay, don't use our charts. Go put the ATR and MT4 and do the work. It's an hour a day. All right. Go do it every day. All right, just that's done right there. All right, over to Euro New Zealand. All right, Euro New Zealand waited for this trade all morning. Finally, we're out. All right, as you can see right there, and now we're looking to go. Remember, if you want this trade, you already got trade 2 up here. Any pullback in here gives you the opportunity for trade 1. Target is 77.32. Can I trade a Euro New Zealand this time of day? Absolutely. Next session is Sydney. All right. So do you have your entry orders above 76.92? Oh, hold on. Entry order above 76.92. All right. And it's pushing. You don't have much time to get it in there. All right. And then you're waiting. Hopefully it pulls back here and you get trade 1. But what if it just goes? Then you got trade 2. All right. You pressed your winners. 2 positions in that. It wasn't 3, which is optimum. But there you go. MACD tells you you're going up. That target is at 77.32, it looks like. And Euro New Zealand has an ATR of 124 pips. Pound New Zealand. Here we go. We finally got the break here. All right. We got a pullback here, but we don't have 55 pips left. All right. So trade 2. If you pulled it back here and you got it there, you're about ready to get trade 2 in, if not already in. With the target at 207.74, and Pound New Zealand has an ATR of 133 pips. New Zealand yen, all right, to the pip to its ATR. Daggone that, Scott. He's so lucky. Went right to that ATR and stopped. Oh, man, oh, man, oh, man. Nothing to do. It's already happened. All right, New Zealand yen ATR is 58 pips. Pretty hard to trade. Aussie Swissy and Aussie New Zealand don't even have 40 pips right now, so you can't trade them. Pound Swissy, we're waiting. All right. Now, half the time it goes with the dollar and half time it doesn't. All right. So right now it's showing a potential A, B, C to the downside. MACD confirms that, says you better watch for that. All right. So we'll probably come down here to the channel. Now at the channel, watch for the bounce. And remember, you're above the zero line, so you are a buyer. If you see it roll over to go back up, there's the trade right there, right there. That won't happen until London tonight. Target right now is at 1.1064. You'll get a new ATR after 5 o'clock. Pound Swissy has an ATR currently of 58 pips. There we go. All right. Thank you. So here's a spreadsheet from wrong one. That's the one I put up there. Oh, I got it. I know what it is. Hold on. I got to go to your personal one. Abdul. So if you want to see what they look like, let me make a big. Here's Abdul. All right, doing his flag work. All right. All right. Look at what he's got. So he knows. All right, bull flags, when he did it, were 90.1% correct, 9% they didn't work. All right. That 91%, the poll, it equaled the exit 91% of the time. Break hook and go was 86%. 86% of the time, he got a break hook and go to set up that move. All right. And 46% of them turned from the 618. That's the information you need, folks. This is what you need to become a trader. Everybody thinks, yeah, I just got to follow this little indicator. It tells me when to buy and sell. That's not going to make you a trader. It's going to make you a gambler, but it's not going to make you a trader. All right. And a gambler is not sustainable. A trader who does the work and does it all and gets it down, understands the why of the market, they can get sustainable. You can become world class in 100 hours. I'm going to save that off, Abdul. And 300 Abdul, and then it'll be right next to the other one. I'll be able to find it. Oh, I don't have an E on there. There we go. All right. Thanks, Abdul. So there you go. There's a perfect example. All right. What kind of information do they have? Okay. Over here, flags overall. All right. 90% of the time they work, 10% of they don't. 90% of the time they will do the exit, the pull in, and 83% of the time they will do a break hook and go. All right. On the Euro New Zealand. See that? That's a trader. It's not a gambler. That's a trader. All right. Everybody see that? See what you're missing? You know, I'm trading, I'm risking money, and I haven't got a clue what the currencies does. I'm risking money basically as a gamble because I don't have a clue what the market does. I don't know what it does. I think it's doing this, but you know, the more I sit in here, the more I realize I don't know what it's doing. That's right. Why it's a great place to be. We'd love to have you stay. You know, I mean, the open house is to show you what you're missing. That doesn't mean, in fact, only 1 out of 10 people ever stays. 9 out of 10 say that was really great, but I'm not going to stay. And they go off and they blow up their account and they're no longer successful and they wonder why. One of our traders, Mark, I don't know where he is. Mark might be here today. 10 years ago, I met with Mark and, you know, he wanted to do it, but it was not the right time and the money wasn't there and all that. So what did he do? He couldn't afford it, or he didn't, actually didn't, when they didn't afford it, he didn't want to afford it. All right. So he spent the next 10 years buying guru stuff and spent more money than he would have ever spent. And he'd had 10 years experience with us. And then 10 years later, he comes back and says, wow, I was such an idiot. Why did I ever do that? So I'll show you a video from him tomorrow, most likely. All right. Fast trackers. Do we need to go to market analysis this morning? Fast trackers, market analysis. Long time. There you go. Erica, there's your answer. Long time. Thomas, no. No, thanks, Robin. Okay. No, Robert. Okay. There we go. All right. So I'll see all of you tomorrow. Everybody have a great day. Be careful in the market. You know, it's crazy. Wait till you be sure of that dollar index. All right. Abdul's been with us since 2020. Okay. 4 years for Abdul here. He was a trader before that. All right. So, all right. We will talk to you soon. Have a great day, everybody. Take care. Oh, wait. Yeah, we do need Roy today. Oh, thank you for reminding me. Hold on. Let me get him up. All right. Sorry. I got to play Roy. Exactly. I only get to play this once a week. I will be here tomorrow. Don't forget. Tomorrow morning I'll be here. We'll do a Q&A. So we won't be trading. I won't be looking at charts. We'll be here just to answer your questions, and there are no dumb questions. So here you go.
It's over.
Yeah, there you go. All right. Now we're ready to go. See you tomorrow morning if you got any questions. All right. Newbies open house is a free day for you. All right. You can ask, all we'll do is answer questions. You can ask any trading question you want. If I know the answer, I'll tell you, yeah, I know it. If I don't know it, I'll tell you that also. All right. All right. See you tomorrow, everybody.